Welcome to today's edition of Beyond Reasonable Doubt. My name is Josh Wong. For today's topic, we shall be looking at insurance myths, and I'm going to break them into chunks. We cannot cover all of them in a single day. By the way, it's a way to keep you engaged. So, again, a reminder, this is Life Insurance Awareness Month. And let's go right into it. By the way, I want to appreciate those of you who have been following this series, from the beginning of the month. We are halfway through the month, and now it's time for us to start considering some of those myths. And if you have any of those myths in your mind, I would appreciate if you can put them in the comment section, put them as a question or however, so that we can see what is going on in your mind, and if we can address them, it will be very helpful to you and other people that are in the same situation as you. So let's ride on. First myth, you hear a lot of people say life insurance is only useful after my death. Well, if you thought like that, I'm glad you said that, because I'm going to clarify your mind right now. So, first of all, those of you who have been following the series, we covered one episode where we talk about life insurance or insurance in general as a risk management tool. So, and risk is not only associated to death. There is other things financially that involve risk that you need to plan on a personal level. Like if you live too long, for example, you don't know when you're going to pass away. If you're living too long, then you might need to plan for that. You run out of money. Risk of investment, you will need long-term care if you live too long. Estate planning, after you pass away, how is your estate being sorted out? If you have a will, if you don't have a will, and even with a will, how is your estate being planned? So those are some other risks that you can take care of besides just passing away. So, and by the way, when you say it's only useful after death, do you really know when you're gonna die? I'm really wishing that you live long, but in either way, if you live long, you still need to plan for long-term care. And by the way, if you say it's useful only after death, death is already guaranteed, by the way. It's going to come. We just don't know when it's going to come. So because it's guaranteed, why not do it early? Because we saw also in another episode, if you get your life insurance early on, particularly for the permanent insurance, then the cost is very cheap when you get it early on, and you can cover the cost earlier. And the long term, it would serve you really, really cheap. So because death is guaranteed, and if you think that it's really useful after death, it's a good thing. So because death is guaranteed, it's still useful. Why not just sort that out? So I hope this helped to clarify your mind on that. So let's look at the second myth. And by the way, if you have questions regarding this one, please, I'll appreciate if you put them in the comment section. Thank you. Second myth in this episode, you hear people say, my company covers me, so I don't need another insurance. Are you one of those? Do you think that way, or you're still thinking that way? So here, I hope we're going to clarify that myth for you. Here's what is the truth. Your employer only covers you as long as you are employed. And now, at this point, let me just stop here for a moment. How many of you have switched companies, switched jobs? Some of you have switched a couple of times, couple of companies. And how many of them how many switches you still have in the future? So you get where I'm trying to drive at. So every company you move to, you're starting all over. So every time you move on, you lose that coverage. So this is not your personal insurance. And by the way, the company does not need your consent if they want to cancel or reduce it, because they may also themselves get into financial hardship, at which point they may decide to reduce it or cancel it. They don't need your opinion. And if they do so, where is your risk management strategy? to you and your family. And by the way, because we look at the life insurance as a risk management tool, your employer is not concerned about how your family financial risks are managed, are they? So who takes care of that for you? It's only you. You have other risks like your children's education, their marriage, medical emergencies, your retirement income, your estate planning, and so on and so forth. Who takes care of those risks for you? And even if you were lucky to have the company insurance for life, which I don't know anyone does, but in case you do, does it really take care of all these things for you? So as long as you're employed, it's good. You have whatever you have, it takes part, and it's only temporary for a certain period as long as you're with the company. But immediately you leave the company, it flies out through the window. So something to take note of. Your family is much more valuable to you, more important to you, and changing the generation of your family is more important than a job. And no job is guaranteed, by the way, for you for life. So I hope this helps you to clarify this myth for you. And I want to thank you for watching, and continue to thank you for your support for those who have been following. If you like what you heard, if this did help you in one way or the other, please click on the like button. We'll appreciate that. By the way, your presence here is always well appreciated. And why not share with some friends or some people that you know this could help them in one way or the other. And if you want to get notified with the next coming episode, subscribe to the channel. Thank you, and you have a wonderful day.